Welcome to TradersArmy.com, defending your right to build wealth and preserve capital for generations to come. Yeah, Wednesday. Yeah, 2019. Welcome, everybody, to the Daily Market Commentary. I'm your host, Chuck Fulkerson, welcoming you to our first Daily Market Commentary of 2019, as it is January the 2nd. Hope everybody had a happy and wonderful New Year's time. Enjoyed a little bit of rest and relaxation, and now we are back at it. For those of you that are new to the channel, do me a favor, click that subscribe button down below, smash that notification bell so you get the updates as they become available. For those of you that are not new to the channel, do me a favor, drop a little comment or a like or whatever it happens to be. Let the algorithms know that humans are actually watching this thing. So let's dive right in. So the S&P, we are down 32 points this morning. As we had that huge buy at the end of the year last year. I say the end of the year, late last week. And then for those of you that were part of the live trading room Sunday night, we talked about a potential breakout above 25.20. And if we broke above 25.20, then there was room to run. However, we've been unable to get above 25.20. As a matter of fact, the market has been, has bounced off of that number a couple of times. And that number then makes it that much more probable when we do eventually get a breakout above here, if indeed we do. So technically, this is a breakout long opportunity above here because my 4-hour chart has given me higher swing highs and higher swing lows. Now, I don't have a lower swing low yet, nor do I have a lower swing high yet. However, my upward move has definitely stalled in terms of momentum. So we're down pretty heavily this morning, and we started, we had a quick move up last evening right away, but it, quite literally hit our resistance and turned back around and started to come back down. Now, by the way, I'm not saying that I shorted that because I was looking for a potential breakout long above that region. So I didn't short this thing coming back down. However, when I look at it on a 1-hour chart, I may have viable opportunity to get short right about now. And this is right at the London market reversal period. So being right there at the London market reversal period, this becomes a pretty good short opportunity. So if you're not short yet, I think it's okay to get short below maybe 24.63. We're putting in a reversal candlestick right now, but this little bit of basing here gives me enough potential to get short, and that was really on the European market open. Now, we've rallied up throughout the European market's movements. However, now's a really strong, we got a big reversal candlestick. For those of you that are the candle-to-candle style of traders, you may get a reversal off of this candle here. A little bit more conservative, you could get short below these two candlesticks lower wicks, which is that 24.63 area. If indeed you're looking for that as a potential opportunity. Market's already down 32 points. I think it's just going to continue to fall a bit more. The Nasdaq is down significantly more than the S&P. So the Nasdaq is down almost 2% this morning, down 121. And so this is really where I would see a potential for a stronger reversal, would be this area right here. This area here, to me, is a better reversal opportunity. And if price comes into here, this could be a great place to get short and for price to kind of come back down. Now, remember, our 4-hour has told us that we could theoretically be buyers, but it's very early in that stage. On the daily chart, we are still technically sellers, right? So no doubt about it, on the daily chart, we're still technically sellers. There's a number of equity positions that have rallied into resistance that could become readily available on here as well, right? I mean, stocks like Amazon has rallied into its area of supply, and we've got a breakdown short below that 1443 as a potential. Stocks like Apple have rallied up into the area of supply. Stocks like Facebook, begun their rollover. So these FANG stocks, which were the darlings of early 2018 and the dogs of late 2018, are kind of continuing that move. I've been looking at individual positions. For those of you that are regular subscribers to TradersArmy.com, we look at individual equity positions and individual options a little bit more frequently, and those are really have been what's been so telling about most of this pull down in the market. So just keep an eye on that as an opportunity for today. Do I have a potential for a short on a breakdown? And looking at the individual equities maybe can open those opportunities up. Crude oil. So in crude oil, we actually had a potential trade off of this level here. We kind of came back and popped just above it, but we've since fallen from that area. When I look at crude oil on a 4-hour chart, we are still inside of this. You know, we set up a 55 by 40 iron condor a couple of weeks ago, and still inside of that level. But as far as, you know, adding new levels to the chart, I don't really want to add anything new to the chart at the moment because nothing is really sticking out. We could theoretically place a short below this area here. There is a potential for a short below this line here, below 44.40. Looking at that on a 1 hour, it looks like that could be a spot, and the fact that we're getting lower swing highs into that and we're basing in front of it could indeed lead for a short-term breakout. My only fear below that is this little wick over wick level we have here, but I think we've bounced off that a number of times, and that probably would bode well. In gold, so gold, we have a strong upward trend, and gold is still kind of moving to the upside. You know, I talked about in gold on the live trading room the fact that our momentum was weakening, but I wasn't willing to get short. I was hoping to get a deeper pullback for an opportunity to get long again. And you don't really have a shot to get short in gold until way up here, and you got to find that on the daily chart. Now, on the hourly chart, we're definitely weakening in our upward. We were weakening in our upward momentum until the new year, and then we've popped up pretty strong from there. So what am I looking at for today? Well, it depends on how deep of a pullback that we get, but we have come back to a decent little reversal point in gold right here. And remember, for gold, one of the times of days that I look at are going to be around the Australian market open as a high probability time of day, and that's kind of where we're seeing a bit of a reversal off of this right now. So kind of keep that one in mind. In our bonds, we had a bond triangle breakout pattern, and that triangle breakout pattern was this hitting above here, and price has really run up from that area. So if you are in that thing, now it's time to take your stop and move it up underneath the last level of demand, as we are coming close to our next target. So kind of keep that thing running. That's moving higher, but nothing to add at the moment. In the Aussie, so in the Aussie, we actually have a lower swing low and a lower swing high. We had been on a 4-hour time period kind of chopping sideways, but we finally broke below this candle's low. Now, this wasn't a breakout candidate, and here's why. Look at all those wicks, right? Wick down below would have broken me out. Wick up above may have shaken me out, and now we've come back below. So this tells me that I'm much more apt to be a seller than I am to be a buyer in this market condition. And so even a little bit of a rally would be enough to get me short on a reversal. And I'd actually, frankly, be okay if you took a breakout below our current price. In the euro, strong sell-off here in the euro on the 1-hour time period. Looking for any sort of reversal back up in here is an opportunity to get short, but right now for the euro is probably not our best opportunity. Our better opportunity, I think, is setting up in the Canadian on a breakdown below this 73.30 area. So if we break below here, I think this becomes the better breakout candidate, but kind of below here. You've got a bit of a reversal in this area here on a 15-minute chart. We've come close to it twice, so I need to change that from a breakout style to a confirmation style. Remember, when I come close to an area, I will oftentimes convert it to a confirmation style entry in order to reduce the likelihood that I get in the trade, right? I don't necessarily want to get in the trade unless the confirmation tells me to do so. Here's an example of that. So here's our Japanese yen trade. Now, on Japanese yen trade, we came into the level, base, came out of it, and then popped right through it, right? Now, had we come all the way through it right away, then there's no fill on this entry. But this one is one where you would have gotten the fill and then almost immediately gotten a stop out. Now, that doesn't happen very often when we use confirmation entries, but like all trades, it does. And I saw a really great tweet earlier today, and it said, you know, there's only 4 types of trades: big winner, big winner, small loser, break even. There should be no big loser. And here's a great example of that, because your stop out is pretty close, pretty tight, so it's not going to hurt you and kill you overall. On your 4-hour, we are way overextended in our 4-hour move up, but realistically, we shouldn't be sellers at this point, right? We should only be buyers. And so I would need a pullback to a better level of demand, or even a candle-to-candle swing in order to get long on price kind of coming back up. So right now, I don't really have a high-quality demand level that I'm in love with down here, although we're bouncing off of and putting in a little bit of a reversal candlestick pattern as we speak. If we can break above this little supply area here, there's plenty of room for price to kind of continue its run higher off this 15-minute level. Looking at the Great British Pound, the Great British Pound is also having a really strong sell-off, a very weak day in Europe and with the pound, as the dollar is finding a lot of strength. So I would actually look a bit higher than current price. So somewhere up in here at this wick over wick resistance. Now, understand this about this wick over wick area. This little level here, this wick over wick, has already been tested once. And I know that because of this wick here. Wicks matter. The wicks are important parts of trades. And so I need to dig to a 15-minute chart to go to the area that's not yet been tested. So what I would have to do in this case, if I look at this on a 15-minute, is just take this upper pivot. Now, even this upper pivot, if you look at here, rally, we went sideways here, strong move away. We then, on this one candle here at 330, had a retest and then sold off again. So this level, while it looks good on the surface, has already been tested. It doesn't matter that it was tested within 15 minutes, because the orders that are there don't care about how long they've been sitting there. What they care about is whether they get filled or not, right? And even that one candle right after fills a lot of these orders, which reduces the probability of it working again. I'll still leave it on, but it does reduce that probability of it working again. Next is copper. So copper, we've put in a little potential reversal area just above us in here. Copper had been, kind of sideways for a while. We got a really big sell-off here at the very end of the year, and now that sell-off is continuing, so this would be where our next opportunity to short would be in HG. All right, everybody, so that's about all I have for today. Those of you that are subscribers, keep an update on the private trade feed that we have, as we may identify additional opportunities in there today. If you're not a subscriber, go to tradersarmy.com to learn a bit more about how to become a premium member subscriber so you can join our live trading room tomorrow. We will be back with a daily market commentary on Friday morning, and I will see you all soon. Peace out.